Welcome everyone for the second Multifamily Masters virtual meetup, take two, because the first time we had lots of technical issues. John lost his internet connection. There were some problems with people joining the Zoom call, so we just decided to do this second recording of his presentation. So I'm Jason Oram. I have been investing in real estate for 20 some years, mostly doing single family flips and things like that. But now I'm shifting my focus to multifamily large apartment buildings. And that's why I started this chapter of Multifamily Masters, which is a franchise. There's over 40 different chapters across the United States. And so this is the one for the central PA area. Multifamily Masters Dillsburg is probably how you found this, or you're on my list. So today I have John Throne with me, who is a commercial lender. And the reason I wanted to have him on is because there are lots of aspects of apartment buildings, and buying them, you have to have good brokers, good attorneys, good investors, property managers, and then of course you need a good lender, and a lender with the right types of products that can be used to buy these large apartment buildings or commercial properties. It could be self-storage, or it could be trailer parks or manufactured home parks, and any type of multi-family property of 5 units or up. And I think John will talk more about that. But the reason I wanted to bring John on is another reason is because a lot of you that are watching this might consider passively investing in one of these deals, in a syndication deal that might come along. Either I might present an opportunity, or you might learn of an opportunity from someone else. And it's important to know how the financing works, because it's a lot different than getting a mortgage on your house, because there's different products available and different requirements. So John, welcome. Thanks a lot for coming on and talking about what you do. Could you start by just giving us a little background of who you are, where you come from, what types of loans you specialize in then?
Let me see if I can get this right on here, and that'll do that for me.
Okay.
I've got the disc there. It's just not showing. There it is. Okay.
Okay.
What we're talking about here is your larger group, anywhere from 1.5 million up. Under that, we do a lot working with regular bank financing, but the Fannie Mae, Freddie Mac, FHA is tremendous. My background on the commercial is I've been in the commercial business since 1997. I was working primarily with residential mortgage brokers through the Pennsylvania Association of Mortgage Brokers, and doing training in Philly, Harrisburg, and Pittsburgh, and co-brokering with them, doing their commercial deals. This was going fine, and business was building very nicely until 2008. At that point, the large banks and the government brought in legislation that ran 98% of the residential mortgage brokers in this country out of business. So I lost my entire network. At that point, there was very little going on in Pennsylvania, so I started working in Baltimore, Maryland, where there was a lot more networking going on. I joined the Greater Baltimore Board of Realtors there in 2009. They're the second largest realtor group in Maryland. DC is the largest. And everything was building nicely there until the riots hit Baltimore, and then everything went dead again. So in November 2015, I got an invitation to go to a meetup group in York. And I went there, went to the Christmas party I was invited to, joined them in January. I now go to 6, 7 meetup groups, and I'm working pretty exclusively with investors right now, and things are building very nicely. So I'm going to talk a little bit more about this program. Let me see if I can get this thing to move on for me. There we are. Okay. Let me see if I can go to this. Okay. Now I can switch and go right to it. What we're talking about is product capability in the Fannie Mae, Freddie Mac FHA. They also have bridge and construction. As I go through this, and if I don't catch it in here, I'll get it as we go on. The terms are just unbelievable. The property sectors is multifamily, hospitality FHA will do. Fannie Mae and Freddie Mac do primarily apartment complexes and assisted living. When I get into the FHA, which is $5 million or more, you get into the same plus hospitality, senior housing, student housing, affordable housing, mixed use. Standard tenant concentration questions is, are there tenants who are full-time students? If so, how many units? Is the property subject to rent or occupancy restrictions? Are there tenants receiving Section 8 subsidies? Are there corporate tenants? These are just a few of the questions the lender that especially is licensed to do this will be asking. If this is a cash transaction, you need how long was the borrower owned the subject? Do you have a list of capital expenses? Has the revenues increased annually? Has the owner created value? These are just questions mostly get answered through an application that we would do with them.
Let me ask you a question there. So if this is when you're applying for the loan, or
Yeah.
the lender wants to know what your CapEx or your capital expenditure improvements are
Right.
going to be going into that. Is that right?
Yes, they're going to want an application listing pretty much of everything in what your need, your history, your background, where you have what's your rental rate history, if you've done any rehab, and we can do startup also. It just depends on your experience. Financials on the key person's net worth and liquidity, schedule real estate showing maturity dates, liquidity 10% on loan amount, can be cash marketable securities like CDs, 401 IRAs, receivables, unused LLCs do not qualify. The benefit of some of these is I go on and I'll hit right off the bat. This will make a big point, so I'm going to bring it right in. When you get into these Fannie Mae, Freddie Mac, they'll start with $1.5 million up. They'll do an 80% loan to value. They'll do a 30-year term. It could either be a 5, 7, 10-year term with the rest would be variable, or you can actually do a 30-year term. All that will affect the rate. I have 75, but they're doing 80%.
Did that just recently change? That they increased to 80%?
Yeah, they'll do 80 as long as you're solid. If you have some problems, they're only going to do 75, but they will go up to 80. When I get into FHA, they'll go up to 90%.
Okay, but they're a little harder to get, correct?
No. The biggest thing with FHA is you got their minimum is $5 million.
Right. Okay. So it doesn't apply to all properties that you would come across.
No, this is getting into your bigger properties. But I was just talking to them on the phone yesterday. Their rates, their terms right now are 2 3/4 to 3 1/4%.
Wow.
Unheard of.
Unheard of. That you've never seen that before in the history of mankind, right?
But the reason these lenders who are licensed by them will do that is because they've got the government guarantee on it.
Right. And as we're recording this, we're August 19th of 2020. In case you're watching this a year from now, it could be completely different. Who knows?
The biggest key with these is they want to see 90% occupancy. Now, if you're doing construction, you're going to do a rehab. It just depends. FHA will do rehabs right through them, and then they would then when it's you got it finished, you got your 90%, then they switch it over to a permanent term. On the Fannie Mae and the FHA, the lender usually has a separate bridge lender that they will work that through. So you can, if you buy one or you're building it or what you're doing, you got to build it up there until you got that thing built. You got a 10% or 90% occupancy, then it's easy to switch it over from there.
So they look at rent rolls then, and like a T12 trailing 12-month rent.
They'll have charges to replacement reserves. They'll have leases for 12 months, parental guarantees for students, near a campus of at least 10,000 students, 50% must be full-time. These are just some of the restrictions.
Okay.
Military, any property with 20% more concentration. Again, this is mostly on FHA. They're going to look at the stability of the military installation. There's just so many different little things involved, so it depends just what you want to do. Corporate tenants, that's another advantage you can do with these. You can have, if you have apartment complex going up, you can have the first floor, as long as there's no more than 20%, could be actual corporate tenants, stores, so forth and so on. And the rest can be apartments. More than that, they won't allow. Rent growth will remain healthy. In fact, I have a thing I'm going to add on there that I just got from these people telling about what's happening with the market. And of course, we're hoping a vaccine will soon hit. This is Fannie Mae multifamily. They have $1 million here. They go into $1.5 million. Amortization, debt service coverage ratio, loan to value usually 80%, fixed or adjustable. Multifamily, minimum 5 units. Single asset entity. Occupancy required for 60 days at application and commitment. That's when you're getting the permanent loan. Tax and insurance escrows, replacement reserves, $200 per annum per year, non-recourse.
And that's important. So what that means, non-recourse.
They're not going to come back on all your personal. They can't come back on all your personal stuff.
Right. It's backed by the asset, not the person.
Exactly.
Managing. Yeah.
Again, commercial space limited to 20%. A loan is assumable with Fannie Mae, Freddie Mac, or FHA approval. Somebody can buy that and assume your current mortgage if they're approved.
There's a 1% fee. What's that all about?
What?
It says 1% fee. Do they charge a fee?
They'll charge a 1% fee to do that.
To assume it. So if somebody wanted to come in, buy the property, assume the loan, they'd have to pay.
Yeah, they can assume the existing loan for a 1% fee. Supplemental loans are eligible after 12 months. You can go back to these people and get a supplemental loan after you've had it for 12 months, maybe for repairs or something like that you're doing. I already went through the rates.
Explain the senior housing aspect. So that's really popular right now with, we just went through COVID, lots of senior housing problems. The smaller residential senior housing seems to be really popular. Would this
senior housing is popular. Mostly who's doing that is FHA. That's for 5 million and above.
Okay, for large senior housing, not small. Okay, yeah.
Again, you're talking, these are your large loans. These aren't your everyday loans that somebody's going to get into. We can do them, but they won't go Fannie Mae or FHA or Freddie Mac, okay?
Right.
They'll do student housing. as the rates were 3 to 4, they're now, as I say, 2.75 to 3.25. That's tough to beat.
That
Freddie
really is.
Mac, there's the same thing. Similar. They have to both. It depends. Lenders will usually pick which one is the most ideal for the current loan that they have or working with.
Okay.
They're similar. Again, non-recourse bridge program may be available. Exit fee. Another thing that will help on these is a green advantage. That will help on the rate. If they have you're building, you're changing, you're putting green advantages like solar things in and so forth. That will have an advantage and it will affect the rate.
Okay.
Okay, this is the FHA 223F, and there's quite a few different FHA programs depending just which one's going to be ideal. I'm not going to do
this is for a refinance then?
This is refi or acquisition.
Okay, I see.
Minimum 5 units, at least 3 years old, substantially rehab at least 3 years prior to date of approval, commercial space up to 20%, single asset entity they want for borrowing and plan, whereas you can't have several different lender or buyers in there. You can if you're all into an LLC or a corporation or so forth. That's a single asset entity.
So for a syndication, for example, would you be able to use this type of product?
Depending how the thing is set up.
Okay.
I don't have all the answers, but whatever the problem is, whatever the question is, if that's it, I can make a phone call and get a definite answer.
So the answer is it depends.
Yeah.
Yeah. So for example, so if what product would you recommend? So for just an example, so you have a 75 unit multifamily property that is selling for $50,000 a door, so about $3.75 million. What product would, so that's kind of like what I'm looking for right now, really. So something
Okay,
like
that product, I'm going to look up to $5 million. I'm going to talk to about a Fannie Mae or Freddie Mac.
Okay.
When I see which one, when I have the basic information on it, when I talk to the lender even by phone, and they can tell me which one would be the best for you, which program, either one or the other. When I get over 5 or close to 5, obviously FHA has more leeway than they do. That's a tremendous program, but it's also getting up in the dollars.
Right. That would be more probably double that size, right? So it'd be 150 unit property.
Right.
Would be a perfect fit for for that type of product. Yep.
Mm-hmm.
I got you.
FHA has, for apartments only, has gone up to 40-year financing.
Wow.
I mean, there's nothing like it out there.
They're incentivizing. They want to get into those types of deals, it sounds like.
Right. That's just going through some of the, again, your Fannie Mae are going to be anywhere from 80, may go to 85. FHA will go to 90.
Would you want to leverage that much? Is there an advantage, or would you want to bring more capital?
The leverage is the rate's that cheap. The less of your money you got to put into it, the better off you are. Put your money into investments otherwise.
Right. And then would that include any CapEx improvement money? Would they lend that and on top of the purchase?
If you're doing the whole thing together, yes.
Okay. So if you're planning to say right now, a strategy that is working for people buying is that because they have to have so much in reserves right now because of COVID, they're waiting a year to do the CapEx improvements. And so to try to show the investors a little bit more return the first year, because a lot of times when you do the CapEx in the first year, the returns aren't as good for the investors. So to try to even that out a little bit. That's what they're looking at. So would you have to do these improvements the first year, or could you wait a year?
Well, it depends. It depends on the condition of the property.
I see. And
What
so,
I do in a situation like that, I got somebody, like say yourself, you're interested. I'll get a basic application filled out, send that off to the lender, get on the phone, and at that point, from that point on, I'm going to bring you and the lender right into discussion, the FHA party, right into discussion, so we can get this thing moving steadily, and you'll be talking with them directly from that point on.
I see. Okay.
And this is before you spend any money at all.
Understood. That's good.
No, because there are different things. They may find something better than what I'm talking here, as far as the term they can work with. And if that'll work, great. We want to get you the best deal possible. There is no maximum loan size. There are different FHA programs, different numbers. So I'm just going through the one here. I don't want to go through all of them because I have you bored still. But again, the rates have now gone down to what they were, which is nice. For refi of existing HUD, that can be done.
What's the time limit on that? So how long would you have to own the property to be able to refi it?
I'm guessing probably a year.
Okay, that's the minimum. Okay.
And after a year, you can actually go to them and get money additional for repairs and things like that.
Okay. Depending on the value. If the value's increased, you mean?
Right.
Right.
Well, you're going to increase the value with that.
I see. Yep. And in turn, so basically the way you increase a value on a multifamily rental property, apartment building, is that you're increasing the rents. So the value is 100% based on what the rents are.
Yeah.
And the market dictates the rents. If your property is in great shape, you're going to be able to command the most rents. So that's where you do some forced equity value.
You never know. You may be building an addition into it, putting something like that on. So, I mean, there's a lot of possibilities.
Mm-hmm. Sure. That's why I love this asset class so much, is because of that fact that you can make it worth more just by doing some simple things.
This is again just talking about some of the things: amortization up to 40 years, non-recourse. Only thing with these, federal labor standards are required in FHA. So you can't pay cheap labor. They're going to require you to pay your standard labor rates.
For property management or maintenance, or
no, for construction.
For construction. Okay, so they look at your construction company and look at what they're paying. Interesting. I didn't know that.
That's on FHA. Yeah.
Okay.
I mean, you're dealing with $5 million projects. They want to make sure this thing's put together right.
Right. Understood. Yeah, it makes sense.
And again, there's another FHA 232. There are different programs. I'm not going to go through all of them right now because you're not going to remember them all anyway. I just put some of the different things in. There are refis, acquisition. When you find out there's hospitals, they'll do FHA will do hospitals. They'll provide for service for inpatient medical care for the sick. There's a lot of different things. If somebody wants to get a question, I would have them give me a question, what they want to build, what they want to do, make a phone call, we'll get an answer, and we'll take it from there. It's just like when I think you talked to me somebody talked to me the last week, and within an hour I had an answer for him.
That's good. Yeah, you're a great resource to have for these types of things. I don't want to know how to do all of the aspects. I just want to know that I have people that know how to do them.
Exactly. Yeah, let them. They'll walk you right through the whole process.
Excellent.
And that's very important. Different documentations. I'll use my basic commercial application, personal financial statement, rent roll, renovation, pictures, 3 years tax returns, personal and business. And At that point, go back here. At that point, I will send it to them. They're going to want their documents. So that'll give them a basis. They like the looks of it. Then they will send to me out of the documents they want. We'll fill them out, get them to them. And then you're going to be talking with them on the phone from that point forward. Anything they want me to get in between, I'll be happy to do that and work with you. But they're going to take you and work very close with you through the whole project. So when you're talking to somebody, you know they know exactly what's going on.
Very good.
Just to add to this, I put this in because I just recently got it. This just came into me this past week. Your small multifamily weather storms, the COVID-19. COVID-19 has created historic economic disturbances with the uncertainties. But from the whole looks of the whole works, it looks like as soon as they get this thing over, this thing is going to take off. From what I can see here and from people I'm talking with, there's a big desire out there for rental properties. And once they get this thing solved and they get the vaccine for this, you're going to start to see everything just start to run. And that's a great feeling.
Sure. Now, when you say small multifamily, what's your definition of small?
When I'm talking this type of thing, small multifamily is probably Fannie Mae and Freddie Mac. When you start getting into your larger, that's getting into your FHA.
So below 5 million is small.
Yeah.
Okay. Very good.
But even beyond that, we can talk different rates I have for under your $1.5 million. There's different sources we can use to do that, and the whole market is just kind of sitting, waiting for it to go. And it's not this in every business, but in this business, this is going to take off.
Yeah, that's kind of what I've been hearing across the board.
And it's great to feel this way and know that's coming, especially in our position sitting.
Sure. There's a lot of uncertainty right now, but the one thing that is certain is that people are always going to need a place to live.
Oh, well, what's happening is a lot of people that are losing their properties or different things are going to go into renting. Yep. A lot of your older people are tired of taxes, taking care of properties. They just as soon go pay a rent and not have to take care of anything. And then you also have another big share of market that's helped the rental is your people that are going to college. They come out of college with $150,000, $200,000 college debt to pay off. They're not going to buy a house for a while. They're going to rent. So when you look at that market in front of you, it's a large rental market.
It is, yeah. Just like you said, with the retirees alone, the silver tsunami they call it. It's the baby boomers are going to they're going to want to rent. Yeah, they're selling their houses, and hopefully they're going to be able to, they're going to want to rent, I think, like you said. So yeah, there's a lot of potential in this business for sure.
Well, especially with what's coming on, the way it's growing, and and this market we're in right now is a pretty sound market, and it's good.
Excellent.
That's pretty much explaining it pretty well.
Yeah, that was a good overview, I think, for the people watching who are interested in getting into this business, or whether actively or passively. I think there's a lot of uncertainty in the stock market. People are starting to look at where they can place capital that have it sitting around. Real estate seems really intriguing, and so that's why I want to try to help people here be able to place some of their capital into real assets, not into the roller coaster of the stock market, right? So it makes a lot more sense to
there's a lot of other possibilities with this whole thing. For instance, not only do you have rental properties, you also have self-storage,
sure,
which goes along nicely. You can get into self-storage with up to 90% financing through SBA. You have one of the things eventually I want to really market into is your Mobile home parks.
I was wondering about that. So these products apply to mobile home parks too?
No, these products will not.
I see. Okay.
But I mean, that's not hard to get. Mobile home parks are a little different. Uh, the mobile homes themselves, they will not finance. But
Sure.
just the park land has to be worth the value you're talking about. But
Right.
the potential of it, if it's done properly, is kind of phenomenal. I mean, mobile home parks in this market right here, they get anywhere from $350 to $450 a month pad rent. You get down to Delaware where they're right on the water, they're getting $1,100-$1,200 a month pad rent.
Wow.
Just do the facts. Have a 200 pad mobile home park and take that times that rate and see what kind of money you're making every month.
Yeah, they're really good return.
With very little upkeep. You have the same thing similar with condo units. Condo units that are built, if they're built in the right location, the people buy the condo, but they don't buy the land. They've got to pay land rent.
Sure.
So there's when you start talking about potential, what you can do and where you can go, it's unbelievable.
So back to mobile home parks, what products, what lenders are there for those?
Most of the lenders on that are either going to be a banking source or something along that line. I do have a national lender that will look at them. Again, when I know where the mobile home park's going to be, I'll work with them in this market, but because I have the banking lenders that'll talk about it. But you start getting out, somebody wants to really get into it. I want to talk to a couple of the bankers in that area because I can get a better rate than I
Local
can
banks. Okay.
National lender.
That makes sense. What about condos? Who would lend on those? Same thing?
Again, that's going to depend on the marketplace you're in.
I see. Yeah. Always, the answer is a lot of times it depends. Well, thanks, John. Want to tell people how they can reach out to you?
Yeah. Let me see what. Yep.
Oh, there you go.
Anytime you want to reach out to me, give me a call. We can sit down over a cup of coffee. I meet a lot of times at Panera Bread, mainly because they're all over, and they have outside and inside seating. I'll be happy to sit down, see what you want to do. I've done this for a lot of people and prefer to. You know which way you want to go. Here's how you can do that. That costs you nothing.
Well, excellent. Well, thanks a lot, John. I really appreciate you sharing this today, and I'm sure people get a lot of value out of the conversation. I know I learned some things that I didn't learn previously, and I feel like I've been learning about this business for about 2 years now, and that was very helpful. So really appreciate it. And yeah, so I'll be sending this out to everyone in the meetup group and to my list, and hopefully you'll get some calls and sitting down with some people. It's exciting times coming up, I think, for this industry.
Great.
All right. Thanks a lot, John.
Thank you.
Okay. Have a great day.
You too. Bye.
Thanks.